Hi everyone, today let's talk about tomorrow's jobs data, then we'll talk PepsiCo, the usual data, as well as the charts, and my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the Friday jobs report can be massive, and I do think it's going to have a big effect on markets. We did get the ADP non-farms, which were a little bit above expectation. We'll take a look at that on the calendar, and I do think that that's going to be a forecast. Current expectations for non-farm payrolls is 170,000, but realistically anything between 100,000 and 250,000 could take place. And if we get really strong jobs data, I think that's going to cool off the markets, which already have been cooling really aggressively in the new year. And they do mention that here. If we get a number above 250,000, it's likely that we will not see a cut in the early part of this year, which I already don't expect to happen. We currently have very high hopes for cuts. We've been talking about that multiple times on the channel. Fed futures already expect 6 cuts this year. The Fed has only talked about 3 cuts, so lots of optimism in the markets. And I think we're seeing that come out of markets right now. And if we do see a hot jobs number tomorrow, that could be another thing that brings markets lower. The other thing mentioned here right at the end of the article is the unemployment rate. If it stays below 4%, then we're probably not going to see cuts anytime soon. If that starts to tick up above 4%, then we could see a little bit more optimism from markets in terms of getting cut sooner. But right now, below 4%, still very strong on jobs, and there's still quite a bit of openings as we saw in the JOLTS report. Moving over to Pepsi, it did have a little bit of a tough year. It was down 7% last year with the big rallies that we saw across markets. And you could argue this is in somewhat due to the GLP-1 drugs, the so-called weight loss drugs, which is predicting a pretty decent decline in terms of the number of calories that people are eating. These are some of the things that you have to look at when it comes to these food and drink companies. Are people going to continue to consume the massive amounts of calories that we currently do in the United States? And if these drugs are successful, we could see a little bit of a pullback on that. I'm not really super concerned about that, but it is something to pay attention to. And you can see we did peak here in July. We've sold off to a very reasonable level. Anything in this 160 range, I think, is a pretty fair price for Pepsi, especially relative to history. The stock was all the way up in the 196 area. We'll go ahead and look at it closer on the charts later. But just understand, we've sold off quite a bit. We're in the 160s now. 160 is a fair price, in my opinion. Still a downtrend, so we'll look at that a little bit more in detail later. And they do mention here, it does seem like the GLP-1 drugs are overblown and that the short-term impact is not being seen right now. And the question of whether it will be effective in the long term is definitely something that remains to be seen. In terms of data, still a 3% yield, very healthy on a strong company like PepsiCo. There's also a little bit of growth potential with a company like PepsiCo. So definitely something to look at if you're looking for healthy dividends, a little bit safer, something to move into as more of a consumer staple right now. And they also mention here, PepsiCo has invested $60 billion back into its business starting in 2018. We're expecting to see those results here in the next year with the cost of goods sold, such as shipping and inputs, should increase by 4%, down 5% from this year. And we're also waiting to see those wages start to slow down, which would be a tailwind for the company, while operating margins are expected to rise 15%, which is just under the level that they did here in 2023. So 15%, very strong growth from this company. It's also a dividend aristocrat. It's been paying very consistent dividends for the last 51 years, which does translate to a $5 dividend, which was a little bit less attractive when the 10-year was sitting around that 5% range, but now it's around 3 3/4 to 4%, and Pepsi does give you that potential for growth. So I do think it's a good investment, just depends on whether it fits into your goals for the medium or long term. Moving over to fear and greed, interesting to see we ticked up 2 points here today, even with markets still down on the day. You can see we continue to taper off pretty aggressively, everything in the major indicators still in extreme greed. Volatility, neutral, continues to tick higher. got into that 14 range. We'll look at that closer on the charts. Safe haven demand, greed, junk bond demand still in greed. So one holdout, everything's still looking greedy, generally indicating that markets are set to go lower in my opinion. Moving over to the calendar for seasonality. Tomorrow is expected to be quite bullish historically. Definitely interesting. We'll look at that and we'll take a look at it tomorrow on the charts if it takes place, and then understand all this data is coming out. We'll look at that on the economic calendar. And then next week, Tuesday and Wednesday expected to be bullish, but understand there's probably going to be one of those volatile days this week as we lead into the third week expiration on the 19th. Moving over to the economic calendar for today, you can see continuing jobless claims, basically in line with expectations. Initial jobless claims, much better than expectations. Previous number was revised up a little bit, but not by much. Global composite PMI still above 50, but slightly worse than expectations. Global services PMI better than expectations and better than that 50 mark. And then look at this roll off, pretty substantial. A little bit over $30 billion rolling off the Fed balance sheet here today. And then looking at tomorrow, we have CPI for the Eurozone, fairly interesting. But the big one tomorrow, non-farm payrolls coming out at 8:30, as well as the unemployment rate here at 8:30 as well. Expected to be 3.8, and then non-farms right in that 170 range, just like we talked about on the article. If this comes in hot, I do think that's going to be bearish for markets. And then a little bit later in the day, we have ISM non-manufacturing PMI and non-manufacturing prices to round out the week. Moving over to Max Pain, did move down a little bit, 468, down from, I think it was 470 yesterday. 476 continues to be your call wall. Got a pretty big put wall here now at 460. We'll see if that one comes to fruition tomorrow. Definitely don't expect to close that for tomorrow's session. That'd be a big move down. That'd be about 2% on the day. I don't think that's going to happen either. Next level here, 465. Could dip below that. We'll look at it on the charts. Put call ratio right in that 1 range. Pretty low for this chart. And then total options, 1.1 million. Not a ton. But look at these calls, tons and tons of calls at the money, pushing markets down. Moving over to the charts, starting off with the S&Ps, we consolidated most of the day. And then once we got into that afternoon session, we fell pretty dramatically. Really that last candle of the day, you can see sideways price action wicked all the way up to 470.80. Touched that level just for a moment and then broke down really strongly. Down to my 467 level. You can see we're bouncing a little bit after hours from that level. If my structure is going to hold in terms of what I'm looking for, really needs to get back into this green area. The fact that we overthrew the neckline a little bit doesn't really violate my thesis. Can overthrow to that actual support level, then see a rally up into that right shoulder. Still certainly possible in my opinion. It is worth noting that momentum on the daily chart continues to tick more and more bearish. You can see these EMAs on the MACD are very extended to the upside. Last time we got into this range, we did have a very significant pullback. Last time we saw that was going all the way back here to the end of July, which resulted in a significant pullback on the daily chart. Let's go ahead and expand that out. You can see ultimately that was about a 10.5% down move from that level. So if we do see a move like that from current levels, 10.5% would bring us well past the 200 SMA, back down into the 425 area from the peaks. I don't think we're going to see a move like that. I do think we'll find some support down around this 435 area if we even make it that far down. But understand that that is the possibility with the current structure that we're seeing, going from super overbought conditions as we move lower. And even with this previous move, it did take a long time. You can see that was basically 2 months of price action, and there were many ups and downs during that period. Moving over to the NASDAQ, similar thesis, choppy price action, fell into the end of the session. It is worth noting this looks kind of like a double bottom. You can see this second bottom here did bottom out right at the wick lows from that first candle of the day. So interesting to see that. It is showing a little bit more strength than when we've seen on this previous trend. You can see every single low was lower than the previous. And here we kind of double bottomed. It's a little bit sideways because of that close on the last candle of the day, but showing a little bit of strength here. Definitely something to pay attention to. 395.85 was the level, didn't even quite touch it, which is another bullish indicator for me. The candle on the daily chart was not super great though. You can see we did throw a big wick to the upside, it showed a little bit of bullishness. I got chopped up a little bit in that. Not too bad. I was still expecting it to get rejected, but I didn't really expect it to rally that aggressively. Got all the way up to 399.50. That was a pretty strong move. More than filled the gap and then ended up closing basically on the lows. So interesting to see. We'll see how that plays out. We did get below the 50 line on the RSI, so that's bearish. Momentum still bearish. Everything still says bearish, but hourly charts starting to show a little bit of strength. Moving over to the Russell and the Dow, similar thesis on these. Did not fall anywhere near what we saw in these previous sessions. So this trend line continues to hold at 193.64. You can see we're rallying a little bit after hours. Momentum continues to tick towards bullish. Might have seen the first wave here, waiting for a little bit of a pullback back up to this 198.75 level. That could be interesting. You also have a highly traded zone here at 197.31. Could give you a couple of dollars of upside potential over the next couple trading days. So something to watch there on the Russell. We've had a strong down move, waiting for a little bit of a pullback. If it hits that 21 EMA, I would expect rejection. Then we'll see what happens from there. And then looking at the Dow, continues to consolidate in the same range. Still holding that 55 EMA, but stuck below that 21 EMA and my 376.35 level. Moving over to PepsiCo, you can see we have had a pretty decent upswing. It hit the 200-week moving average down around 158. That was kind of an opportunity there. We've since rallied up to 171.85. Pretty big move from there. Looking at about 8.5% from its most recent lows. Looks pretty strong there. Still a downtrend, so we're hitting some of those levels. We hit that second level here, rejected from it on this current week. Momentum on the daily chart still bullish. RSI still bullish on the daily chart. We're above the 9 and 21 and 144 EMA as well as VWAP. Still got the 55 sitting up there at 177.20. Looking down at the daily chart, you can see we did touch that 144 EMA, rejected from there down to current levels. So you have a pretty clear consolidation, attempted breakout, rejection, hit that 55 EMA, held that level, pretty nice, rallied from there, hit the next level, rejected. As long as this 9 EMA here holds, which is currently at 169.94, that could be a tradable level. Continuing to look for this up move. It is worth noting that daily momentum on the MACD is stepping down here today. So you might want to wait until it hits that 21. Probably going to overthrow the 9 down to the 21 at 168.77. And then if this zone here between those two EMAs breaks down, then you're looking for a bigger move down to this previous consolidation down around that 161 area. So something to watch out for. Consolidation, attempted breakout. If it fails, then you're expecting it to break below this previous consolidation into the next one, which could spell more than $10 of downward price action. Moving over to Apple, it continues to get obliterated, 1.27 to the downside. This is a very substantial move from the highs now, all the way down almost 9%, 9% if you include the wick low. I do expect it to hit that 200 SMA. We talked about it yesterday. If the 144 broke, the 200 was your next level at 179.91. And then below that, I have 178.58. We're below all of the EMAs, still holding that 200 SMA. Big bearish momentum. It is worth noting RSI did hit oversold conditions here on the daily chart with a 29.78 reading on the close. If you get an island reversal here, that could be interesting. It is up a little bit after hours. Go ahead and look at that on the hourly chart. So we dipped low with that wick, rallied into the mid-session, fell, but we did not take out that previous low. So you do have a higher low after hours. Want to see this break above that 182.37 level. That could be an interesting level to trade off of for a bullish day tomorrow if you get it. RSI also looking a little bit stronger, holding above the SMA after hours. So maybe we see a little bit of a rally on Apple in the short term just for tomorrow's session. Obviously, longer term, everything is still a downtrend. And then looking at Tesla, this is still a pretty choppy chart. We have not taken out this previous consolidation or this trend line here, which is interesting. Continues to hold that level. So as long as that continues to hold, you could see a continuation higher. We attempted to break out of this consolidation, failed back into it. The trend line of that consolidation is still holding, which could be bullish going into tomorrow's session. Again, looking at the hourly chart, you can see we did find a little bit of bullishness after hours. That doesn't always mean something. But look at this short-term consolidation, holding the trend, looking for a break above this shorter-term trend at 242.26. Moving over to Amazon and Microsoft, these are some of the worst performers today. Amazon, 2.63% to the downside, massive gap down, right to that next level, tried to fill the gap, couldn't do it, and then sold off, and it's down even more after hours. At this point, you're looking at the 55 EMA on the daily chart, 142.82, just below my level. Momentum bearish, RSI bearish, Amazon absolutely waterfall sell-off. This is kind of one of those things. Consolidation, attempted breakout, failed back into the consolidation. We're right at those consolidation lows. If this area breaks, then you have a lot of room to the downside. Definitely something to pay attention to on Amazon. And then looking at Microsoft, this was one of the better performers yesterday, ended up down 0.72 today, still holding 367.07, but momentum accelerating to the downside. RSI breaking below the SMA, got the 55 on the daily sitting at 362.73. And if this consolidation breaks, that could be quite weak here for Microsoft. And if the strong performer that is Microsoft breaks down, then we could see an acceleration across markets. Moving over to staples and discretionaries. Staples 0.14 to the downside, not much. Momentum basically neutral. RSI still technically bullish. Trend still intact. Want to hold that 9 EMA at 71.83. As long as that holds, we're still in good shape. Structure is still okay. Everything looks okay, just not accelerating to the upside by any means. Staples aren't really meant to accelerate to the upside very often, but it's still holding its value better than the rest of markets, especially compared to discretionaries. Gap down, fell on the session, down even more after hours. Next level, 170.68. It was already down 0.7% on the day. Momentum and RSI continue to accelerate, and discretionaries still look very weak. Moving over to oil and gas, these did not have a great day today. Oil and gas, 2.25% to the downside. Energy, 1.75 to the downside. I did expect it to hit 87.37, didn't quite do it. Did wick 87, I was watching for that. And then it sold off super dramatically from that level back into this consolidation. As long as this area holds, I'll still be fine. Like I mentioned before, 85.56 is an important level for me. I want to see that hold, which I do expect that to happen. It did bounce a little bit after hours. Jump that down to the hourly chart again. We're seeing a little bit of after hour strength. Obviously, it has a long way to go. This was a big move down. Strong volume, big bearish momentum. This could absolutely pull back to the 21, down at 85.81. And then if it rejects from there, then we're probably going to see a sell-off into the end of the session tomorrow. Otherwise, daily momentum weak. I do want to point out this lower trend line, though, from this previous low to this wick low to this current low. As long as that holds, we'll be in good shape as well. So right at that 85.56 critical level here for energy. Moving over to oil directly just for a moment on the oil futures, I do want to highlight we are seeing a wedge right now. So we've dipped low, hit this trend line, dip back to this trend line, and now we're consolidating in this range. It's still holding this mid-range at that 21 EMA, which is bullish. As long as it holds that level at 71.99 or 72, we could see a tick up tomorrow back above $73. And if we do see a move like that, back to that 55 EMA up at 76.50, that should bring energy and oil and gas stocks a little bit higher as well. So something to watch for with the underlying. I still think everything in the energy space looks a little bit bullish. Moving over to breadth on the 20 and 50-day averages. Got another down day, almost 8% on the 20-day average. It is getting into that area of support. We've seen this level be support many times. You can see this rally up here in June, came back to this level, rallied right back into that 86.50 area, did it once again, back to this level, 86 again, and then we eventually broke down to these more substantial lows. So this could be an interesting dip into a major support area. Then we see a rally, something to pay attention to. We are there now. So if we see a bounce tomorrow, that could give you that right shoulder that I was talking about on the S&Ps. Otherwise, on the weekly chart, we are seeing a bearish candle at resistance. Momentum on this continues to roll over, which I think is going to be quite weak. Looking at that on the daily chart here, you can see we've had a lot of consolidation days at these highs. We did see a more substantial down day. We did see one like this on 20 December. Didn't mean much. We ended up rallying. But right now, let's go ahead and look at it a little bit closer. We're below the 9, waiting to see if that 21 holds at 86.84. If that breaks, then you're looking for a lot of downside potential back into that 62 area. And it is worth noting that once you see a breakdown from these peaks, it's not very often that you see a major reversal until you at least get back to this mid-range. So you can see here in November of 20, pulled back all the way to the 40 range, rallied back up to the 76, and then we dipped all the way down to those March lows. Similarly here in July of 23, fell all the way to that 32 range before really stopping, slight pullback, and then we fell all the way to this 1050 area. So this looks quite weak. I also want to show you on the RSI, this looks very, very weak. Consolidation, retested the RSI here, broke down, retested it once again, broke down, made a lower low on RSI. So everything looks very weak across markets, and the 50-day average is saying that we're going lower. Moving over to 2-year and 10-year, we are seeing yields rally once again. We're above 4% on the 10-year, 2-year up to 4 1/3. heading towards that 4.5% in my opinion. Got the 21 EMA acting as resistance. Haven't gotten above that yet, but the 10-year is above it. Momentum swinging towards bullish on both of these. RSI not above the 50 lines yet, but yields heading higher as I expected it to. We talked about this consolidation at support, rallying off it. Similarly, on the 10-year, we talked about the break above the RSI, momentum. Everything looks good for yields to go a little bit higher tomorrow, and that should be weak for markets on the Friday session, in my opinion. Moving over to the dollar, we got a pause day here, waiting for the data tomorrow. I do think the data tomorrow is going to be pretty important. If we see yields continue higher, I would expect the dollar to head higher. If we see yields go lower, dollar probably goes lower, and then we see equities go higher. So waiting for that result tomorrow. You can see just a pause day there. Momentum still bullish on the daily chart, and I still expect this to head higher based on technicals, but the data will determine that. Moving over to JNK and TLT, JNK down 0.39, still holding 39.67. I would expect that to break if the jobs data is too strong tomorrow. Similarly here on TLT, we had that fake out day yesterday, which was really strong. Touched the 200, filled the gap, overthrew it pretty strongly, got close to that 9 EMA, acted as resistance, and then we gapped down massive, sold off, and I am still expecting this to head lower based on yields looking pretty strong, at least in the short term. Moving over to the VIX, got another bullish day on the VIX, 0.78% to the upside, momentum bullish, RSI bullish, still at this resistance. Need to see that level break if it's going to 1435, next level 1419. I do think we could see a spike up to that 200 SMA at 1580, but like I said, $15, 1490 is your first resistance, but this is clearly accelerating to the upside at this point. Continues to hold support, continues to make new highs on a closing basis. VIX headed higher in my opinion. Moving over to my accounts, I was down about $50. It says a little bit more than that, but about $50 on the day. Looking at the IWM, I didn't do anything with it today. Continues to cover my losses with that covered call. And then looking at the Qs, still have my call position, still have my standard put position down at 369. This is a little bit closer to the money than I wanted it to be. Market fell pretty aggressive at the end of the session. But you can see we're up about 50 cents after hours, which is nice to see. And I do have a little bit more than $1 credit on that position. So 395 is the break even point for that put position. And then I have my two calls here at 397. One of those it did roll into 22 days from now. So I have a little bit less time there, which is good. I can get that credit a little bit sooner. And then if we start to see a little bit more aggressive rally tomorrow, I might turn this put position into some shares to protect this 397 call for 36 days from now. Either way, these are back to at the money. You can see they're out of the money right now. And these were deep in the money with that really strong rally. So sometimes you just got to be patient. So far, they have protected me quite well. Early in the year, I expected the down move, and that has been working well for me. Otherwise, XLE, this position did go a little bit weak for me today. That was not great. If we get into some shares tomorrow, I'll look to sell a covered call for the next week. I do still expect some bullishness in energy, just like I mentioned, so I'll continue to play that, and we'll see how it goes in tomorrow's session. In terms of my break evens, you can see my break even to the downside all the way down at 385, so plenty of room to the downside. Of course, this goes out to 36 days because that's my longest dated option, so understand that I would have to wait a long time for that to happen, and I would take off these puts long before we got down to that range. And then to the upside, 318.60, and I would buy some shares long before we got to that position. So those are my two adjustments right now, taking off the puts if we're falling, or potentially buying shares if we start to rally too aggressively. Let me know what you think about the jobs data that's coming out tomorrow. Is it going to be interesting, or is it going to be nothing and we're going to see markets continue to fall? Also, are you buying Pepsi? Do you think it's a good place to be right now? It is showing strength while markets are falling, something to watch. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.